Alright, what's going on everybody? Welcome to a new video on my series on technical analysis. Today we're going to be taking a look at the head and shoulder patterns, which is a reversal pattern, meaning that it indicates a change in the direction of the prior trend. So let's just say, for instance, the prior trend was going up and we started to see a potential head and shoulders pattern forming. That would be an indication of potential future downside. So this pattern consists of 3 different peaks, being 2 shoulders and 1 head. The longer the pattern takes to form, the more reliable it is deemed to be. For instance, a 5-month daily head and shoulder is much more reliable than a 2-day 5-minute head and shoulder. This pattern is also much more effective when it is found at price extremes, meaning when the head and shoulder forms at, let's say, an all-time high, or on the flip side, when we have an inverse head and shoulder at an all-time low as well. To be noted, of course, we would like to have both shoulders form their peaks at around the same level, but it isn't always the case. In terms of terminology, the neckline is found exactly at the support line right before the head starts forming, and of course also right before the second shoulder starts forming. To be noted, it is possible that the neckline is upwards sloping if we are speaking about a normal head and shoulders pattern, meaning that the right shoulder could potentially be higher than the left one. And on the flip side, if we're talking about an inverse head and shoulders, it is possible to see the neckline have a slight downwards slope. Also, one point that's really worth mentioning is that it actually is possible to have multiple different heads on this pattern, but the general dynamic remains the same. So one of the most important things to know about the head and shoulders pattern, and for this pattern to be most effective, what we need to see is volume being highest at the first shoulder, as well as during the run-up leading to the first shoulder. Then moving on, what we also want to see is a low volume during the entirety of the rest of the trend. The reason being is that volume can be seen as a voting system. If not a lot of people are voting in order to push the stock price up during the head, that would indicate to investors and to traders that the move doesn't have a lot of strength behind it, and that big investors are not that keen to enter the stock as the price is going up. So how do we trade the head and shoulders pattern? In this case, the entry should take place upon the breakout crossing the neckline. In order to correctly identify a strong and sustainable breakout, what I recommend is to check out one of my previous videos that is specifically dedicated to that topic. Meaning that, of course, upon the breakout, what we want to see is an increased amount of volume, meaning that there would be a notable amount of people voting in order to push the stock down. In order to know where to take profits, one can use the measured move rule, which is a method used by traders to calculate a price target after a pattern breakout. In this case, what we would do is measure the height of the pattern from the bottom of the neckline all the way to the top. We would then use that length in order to project where to take profits from the point of the breakout. Of course, as with any pattern in technical analysis, things should always be evaluated on a case-by-case basis. Patterns are also always much more effective when used in conjunction with other trading indicators. Alright, so that pretty much concludes my thoughts for this video. If you found any value in it, and if you wouldn't mind just dropping a like for me, I would really appreciate it. And finally, just as a quick reminder, I also put the link to the video on how to confirm that a breakout is in fact true in the description below. Thank you guys so much for watching. I will see you in the next one.